Is a Ripple settlement with the SEC around the corner? Well, Stuart Alderati gives us some information about that. I also have Molly Elmore talking about tokenization. Mickey B. Fresh posted this great clip with David Schwartz talking about the XRP Ledger. Also, we're going to look at crypto adoption and the world map. Brad Garlinghouse is talking Nostra-Vostra relationships. And we have this last clip with the Federal Reserve trading DeFi world simply strengthen and dominate the role of the markets. We're going to talk about all this. Let's go ahead and get into it, guys. I'm Crypto Sensei. If you're new to the channel, please like, subscribe. I bring a lot of value to the people that do follow this channel. If you're new, welcome. If you've been here a while, I love you.
So, yes or no, any settlement on the table?
We've said publicly since day one that this case settles if the SEC makes clear that Ripple sales and distributions of XRP and XRP's trading in the secondary market does not constitute a security. If they're willing to acknowledge that, the case settles and settles very, very quickly.
I'm wondering how much longer that the SEC can hold their position, right? They've lost. I do think they're going to lose the Coinbase case. I mean, at a certain point, the Biden administration is going to need to rebuild the SEC, right? And I think they're going to need to make some moves before the election. Obviously, there's a lot of people that are unhappy with the current administration's way of handling crypto in the United States. And if things don't change, they could lose some votes. So we'll have to see what happens there. Molly Elmore posted this, had a fantastic chat with Brooke from Glam Gram, yesterday about XRP and tokenization and the future of money. Check a look at this clip.
About real estate or gold or stocks, securities and bonds. All of these are perfect use cases for tokenization. And so the thing itself isn't really being tokenized. What is being tokenized are the property rights associated with owning that thing. And I can sell you the deed to my house via the blockchain. That's important because I think people are confused when they hear tokenization. You're like, how can my house be on the blockchain? Well, no, your house isn't, but the rights to own that house can be represented by an NFT, which is kind of like a deed that says Brooke has the rights to this house. And if she wants to sell me those rights, then we can do that very quickly and inexpensively.
And this is how value is going to move at the speed of light, right? Businesses, real estate, gold, really anything of value, diamonds can be tokenized, and that value and the rights to that value can move via blockchain instantly. Art is a great example. You know, you could do, I've seen tokenization of like sports cars and watches. I mean, there really is no limit to what you can tokenize. There is a new narrative coming around about ERC 404 and DN 404 around Ethereum and being able to tokenize NFTs and sell pieces of that. So we are really at the forefront and the start of this. And as more technology is built, there are going to be more use cases that we're not even thinking about right now. So let me go ahead and play this clip by David Schwartz here. He goes into why I'm so bullish on XRP, right? If you look at the top 20, 30 coins, there's really not a ton of them that are working on this specific avenue. And when he gets to it, I'll pause it and we'll talk a little bit more.
1 to 3 years. I think it helps also to talk to just sort of say that I do think that like institutional DeFi is going to grow over the next 1 to 3 years, but I think it may be helpful to define sort of like what I mean by institutional DeFi, because it's one of those terms that people throw around that people might have, different definitions of. What I mean is DeFi projects built on decentralized layer ones that are aimed at institutional requirements and use cases. Like, just to give an example, you're not going to see institutional adoption of DeFi that doesn't have sanction screening. It's just not going to happen, because these are like strict liability regimes where, like, if you can't not fund terrorists, if you want to do something and no matter how diligent you are, you may wind up funding terrorists, you're just not going to do it, right? But like, it's never going to get institutional adoption if it doesn't have those capabilities.
So this is why Ethereum can't really be used, right? Because those gas fees are paid to God knows who. And if some bank were to do a transaction and the gas fee would go to some type of terrorist organizations or a sanctioned country, that would be it, right? There's millions of dollars of penalty and jail time if some bank or somebody breaks the sanction screening. So the XRP Ledger, this is really baked in, and that is really a unique characteristic around the XRP Ledger that I think that's why banks, institutions, the DTCC, those types of things will want to use something like XRP XLM.
I think we're going to start to see our DeFi applications that can preserve as much of the they probably won't be able to preserve like 100% of the benefits of decentralization, but they will be able to preserve the benefits of sort of like guaranteed fairness to the participants. They will be able to preserve the benefit that there won't be somebody who has the legal right to sort of take the system and leave with, and shut it down and leave with it. I think we're going to see those types of systems over the next couple of years get institutional institutional adoption. One of the obstacles is these very, very general purpose systems. EVM chains are very general purpose, and you can build anything on them. But the part of the problem with that is that the tooling becomes different for every decentralized application. And so if you have 100 decentralized applications, you have 100 different tools and 100 different front ends and 100 different flows you have to learn. The XRP Ledger has kind of picked a different strategy where there's a set of fixed functions that are understood by all the tools. And so I think that will help. And of course, you can focus on the use cases that have the most traction for institutional adoption instead of, again, trying to boil the ocean. But products are going to have to get more mature. They're going to have compliance capability. They're going to have focusing on stability. And the market needs to develop some sort of loop of growing institutional interest with some proven success cases. We're over a decade into this. And to some extent, it's always dangerous when you say what's going to happen, when you try to pick a time frame. To some extent, like, we've come really, really far in a decade. And to some extent, it also, I have to admit, like, the cynic in me sometimes feels like we haven't really gotten anywhere. Like, people are still not using cryptocurrencies for payments. Like, let's be honest, like, that's where the product market fit is really good, and they're not. There's a lot of volatility, which I think is and I think we do think that, like, that's going to start to go away. Like, the logic of economics says it has to. Like, you can't really have a highly volatile asset just because this volatility is a profit opportunity, and so somebody should be turning that volatility into revenue. We have massive pools of liquidity now, like, the trade volumes are enormous. So I think we are set up for the next couple of years. I think one sign is, like, giants like Bank of America, JP Morgan are starting to, you have to be careful with them because they want to seem like they're on the forefront of technology, but also they're very successful companies. So, like, if they could push stop on technology, they would. Like, if you're one of the top 5 banks in the world, you don't want anything to change. You want the world to stay exactly the way it is, and most of your hyping of technology is going to be defensive. But if you look, like, their customers are really recognizing the potential of these technologies, and they're realizing that they are going to have to adopt them if they want to remain relevant.
They're gonna have to adopt them if they want to remain relevant. Chase, Citibank, HSBC are some of the biggest banks in the world. They make billions of dollars off of transaction fees and working with other banks to send payments globally. Most banks don't have this type of profit margin, but the big banks do, and they'll do anything that they can to slow down adoption, because if not, they could be easily replaced with crypto, and that's what they're afraid of. So the world map, a crypto trading adoption. This is by ISO GOAT. As you can see, this is all young dudes. More than 40% of crypto app users are young men. Where all the women at, right? We got to have more women in crypto. I have been seeing some more join the community, but at the end of the day, this is really a male-driven area, and I'm not a huge fan. I mean, obviously, it's a unique characteristic about crypto, but I do think, more women should pay attention to crypto. There's a lot of really smart, amazing crypto influencers, that some of them that I follow, and I think that we should even out this chart a little bit. That's just my personal opinion, but as you can see, most of these are less than 35. I fit in this category now. I'm not as young as I used to be. So I'm in this, 22% area. But as you can see, older people over than 54 years old, it's not a huge market. And so hopefully these ETFs will change that. All right, so boom, Brad Garlinghouse, CEO of Ripple, Nostro Voso Relationships. It represents a $10 trillion industry. Let me play this.
So give me a specific example of who's going to use it. So one of the things we've always said is I don't think banks will be the first customers. We've talked about payment providers, and so we have run pilots out there with the MoneyGrams, Western Unions, Mercury FX, Qualix, a couple of others, and those are payment providers that have massive treasury operations. Using one random example, you have a payment provider that has hundreds of millions of dollars of negative working capital because they've taken their dollars or the pesos and they've pre-funded the account. So they go into Mexico once a week. Let's say they'll wire $10 million to Mexico and then debit along the way. Now, sometimes they overfund, sometimes they underfund. The ability to have real-time liquidity is transformational. The global pre-funded, what are called Nostra-Vostra relationships, it represents something on the order of magnitude $10 trillion. If we can make that more efficient and more useful, we can actually accelerate the engine of commerce kind of on a global basis.
And this is just a smaller use case, right? $10 trillion is a smaller use case. I would love to get into the area of tokenized deposits, right? Tokenized bank deposits. There are trillions of dollars, hundreds of trillions of dollars. You can also tokenize debt, tokenized real estate, right? There are literally trillions of dollars in value that can come out from the world, get on the blockchain, derivatives, stocks, bonds. That's really the future, and that's the future that we're waiting for, and that's why we think something like XRP could reach a very high price if some of these things happen and come onto the XRP ledger. All right, I wanted to play this final clip. You have this University of the Bahamas in the background here, but let me just go ahead and play this and we'll talk about it.
For example, the rapid growth of digital currencies could reduce reliance on the US dollar. People often conjecture that cryptocurrencies like Bitcoin may replace the US dollar as the world's reserve currency.
Won't
But
happen.
most trading in decentralized finance, or DeFi, involves trades using stablecoins, which link their value one for one to the US dollar. About 99% of
This lady's bored. This lady's bored. This guy's like, man, I could be somewhere else. This guy's sleeping. Remember, we just looked at the demographics that are interested in crypto, and none of these people fit the bill.
stablecoin market capitalization is linked to the US dollar, meaning that crypto assets are de facto traded using US dollars. So it's likely that any expansion of trading in the DeFi world will simply strengthen the dominant role of the dollar in those markets. I do not expect to see the US dollar lose its status as the world's reserve currency anytime soon, nor even see a significant decline in its primacy in trade and finance. Recent developments that some have warned could threaten to have status, if anything, straightened, at least so far.
Bitcoin will never replace the US dollar as the world reserve currency. I know that there are a lot of people that would like for this to happen, but the guns, the tanks, the jets, all of that stuff will come out. I'd imagine if Bitcoin got too big, they would ban mining in the US and they would force other countries to do the same. Obviously, this is a risk that we take when we invest in cryptocurrency, but replacing the US dollar, I just don't think it's possible. I could be wrong, but at this point in time in the world, I don't think that replacing the US dollar, I don't think anything is going to be replacing the US dollar anytime soon. Obviously, currencies don't last forever. They usually have a shelf life of 80 to 90 years. The US, I believe, is on this like 80th or 81st year. The way that the current system is with money printing, creating value from nothing, the future generations have to pay for that, right? And the system will only work so long before we're just paying on so much debt that, I mean, the US right now collects $4 to $5 trillion a year on taxes from its residents. If the US needs to refinance $7.6 trillion, and if they do it at this type of interest rate level that we're at right now, you're paying over $1 trillion in interest. So I can't imagine that this system is going to last forever. I do think cryptocurrency will replace the system or somehow fix this system. Obviously, CBDCs would need to be involved on a massive scale to make that happen. And I think that's why you have 130 central banks around the world working on some type of development of central bank digital currency. I hope this video was helpful, guys. If you learned something, please like and share. I would really appreciate it. I'm trying to grow the channel, and I can't do it without your love and support. Thank you. I'll see you next time.